Welcome, my friends. Today, Xcn coin is listed on Binance Futures. Before showing the news, I ask you to subscribe and like the video. Now let's move on to the news. As you can see, the long-awaited development for crypto investors has finally come to fruition. Xcn coin has officially been listed on Binance Futures, and as of today, is now available for trading on the futures market. This news should be viewed not only as a catalyst for short-term price action, but also as a major milestone in Xcn's broader adoption journey and institutional credibility. It's a highly positive and critical development for the project. First and foremost, when a globally leading exchange like Binance, especially on its high-volume futures platform, lists a cryptocurrency, it signals that the asset has reached a certain threshold in terms of liquidity, investor interest, and overall market trust. Binance conducts a thorough evaluation of both the project's technical infrastructure and its community interest before integrating any asset into its futures lineup. With this listing, investors now have the ability to open leverage positions on Xcn, taking both long and short trades. This means we can expect a significant increase in trading volume, heightened volatility, and more actionable technical analysis setups. Futures trading not only boosts a coin's market presence, but also provides traders with a broader range of strategic options. It's no longer just about spot trading. Now professional traders will likely begin actively building positions around Xcn as well. Furthermore, this development signals that the Xcn team is serious about scaling the project and establishing a stronger presence within the decentralized finance, DeFi, ecosystem. Getting listed on Binance Futures is not just about popularity, it's a form of vote of confidence. Binance, in its efforts to safeguard its reputation and user trust, does not add just any project to its futures platform. Following this announcement, we can reasonably expect a positive reaction in the price of Xcn as investor confidence builds and attention intensifies. Many traders interpret such news as a strong buying opportunity, especially for investors who combine technical and fundamental analysis. Listings like this often act as early signals for significant upward moves. Xcn's listing on Binance Futures isn't just another exchange announcement, it's a clear sign of belief in the project's long-term potential and a signal of its growing community strength. This step is expected to bring greater visibility and attract more users to the ecosystem. Now, let's dive into the post-listing price action and examine what might come next for Xcn. To fully understand the outlook, I kindly ask that you follow along until the end of the analysis. As we thoroughly discussed in the previous video, the current price movement still appears to be within the third wave when analyzed through the lens of Elliott wave theory. As you know, Elliott wave theory is a comprehensive analytical framework that interprets market psychology through wave structures. According to this theory, the third wave is typically the phase where the strongest movements occur in terms of both volume and momentum. It is considered the most profitable phase for investors. However, despite its strength, the third wave doesn't usually move in a straight line. Instead, we often see pauses, consolidations, and minor corrections at key technical levels. This actually indicates that the price movement is unfolding in a healthier and more technically aligned manner. Looking closely at the current price action, we can see that the third wave itself is subdivided into 5 smaller subwaves, as is typical. These micro-level internal waves can sometimes be overlooked, but they become more visible when analyzed alongside Fibonacci retracement levels. At the moment, price has reached one of these key levels, specifically the 0.382 Fibonacci retracement. This level is widely regarded in technical analysis as a critical point. It may have acted as support or resistance in the past, and psychologically, it serves as an important barrier for investors. Upon careful inspection of the chart, we can observe a slowdown in momentum around this level, along with signs of indecision in price direction. Candlestick wicks, weak closings, and a noticeable drop in trading volume all suggest that some selling pressure is beginning to form at this resistance. However, this does not necessarily imply a reversal. On the contrary, it's quite common for prices to consolidate at such levels, pull back slightly to gather strength, and then attempt another breakout to the upside. If the price breaks through the 0.382 level with strong volume and consistent movement, it would provide an important technical confirmation that the third wave is likely continuing. After such a breakout, the next potential targets could be the 0.618 level, followed by the 1.618 and 2.272 Fibonacci extension levels. These are not only Fibonacci projection targets, but are also common areas for the third wave to reach. However, if the price fails to break this resistance and selling pressure intensifies, we may see a retracement to gather strength from a lower support level. This kind of correction shouldn't be viewed as a threat, but rather as preparation for a healthier continuation of the uptrend. It's also worth noting that pauses at such resistance zones can actually present opportunity zones for investors. If the price breaks out from this level, a strong upward move testing new highs is likely. That's why, instead of making hasty decisions at critical points like this, investors would benefit from a strategic approach, evaluating chart patterns, volume behavior, and indicator signals together. In summary, when we take a step back and evaluate the bigger picture, it's clear that the third wave is still in play, and price is currently progressing within this wave. The 0,382 Fibonacci level, where we now stand, is a key threshold, and how the price behaves here will be a major factor in determining whether the wave continues. If the price manages to break through this resistance, the upward move is likely to accelerate. Otherwise, we can expect a minor correction before another breakout attempt. After such a significant rally, a small correction would be completely normal. When we evaluate the chart from a broader perspective, a key support line stands out clearly in the lower region, carefully drawn and technically significant. This area has historically acted as a strong liquidity zone, where the price has repeatedly found support and bounced higher. In technical analysis, levels like these are often considered likely to produce similar reactions in the future because of the principle that history tends to repeat itself. Although the current price structure appears to be moving upward, it's completely normal and even healthy for every uptrend to include some pullbacks or corrections. Without such pauses, a non-stop rise could lead to a bubble formation which carries greater risk. Therefore, it's important to acknowledge the possibility that price may retrace to the mentioned support zone. If such a scenario plays out, we could expect a period of sideways movement and consolidation around that area, followed by a renewed buying wave that pushes the price upward again. This support zone has been tested multiple times in the past, which allows us to classify it as a confirmed support from a technical standpoint. The more times a level is tested and holds, the stronger it becomes in the minds of traders and investors. As a result, when the price revisits this level in the future, that same confidence is likely to resurface, making it a strategic zone for both short-term traders and long-term investors alike. In addition, volume analysis supports the strength of this level. Historically, there have been significant buying volumes around this area. This suggests that when the price reaches this level, major players may look to open new positions or reinforce existing ones. It's well known that smart money tends to accumulate at such key support zones. That means if the price revisits this region, it could mark the beginning of another upward move. Looking at the current structure of price action, in the event of a potential correction, this lower support line could play a critical role. It stands as an important threshold where the price might regain strength and launch a new rally. At the same time, it could present a buying opportunity for investors looking to enter the market or add to their positions. If the price fails to break through the 0,382 Fibonacci level, it is highly likely that it will revisit this support zone. For those looking to buy or take positions, that could be an ideal opportunity. Yes, friends, let this video be like this in this video. Do not forget to subscribe, and like the video, much better videos will come. Good earnings to everyone.